Hello everybody, my name is Matthew DeLon.
Hey, this is Sarah Siege.
I'm Tom Fitzpatrick.
I'm Matt Hylton.
Today we're going to be doing our presentation on the automobile industry, our financial analysis. We don't have a lot of time, so let's get to it.
4 major automobile companies were analyzed to determine which would provide the best opportunity for an investor. General Motors, Ford, Toyota, and BMW were each broken down into 3 categories: a general overview, individual financial statements, and the future economic outlook. A 5-year snapshot of the industry from 2009 to 2013 was examined to provide a full perspective of how the companies and industry were performing. All 4 of our auto companies that were examined were affected by the economic crisis in 2008. However, the future outlook for the auto industry is quite promising. Consumer spending for large luxury goods such as motor vehicles typically declines during a recession, as they are viewed as a want instead of a need for a consumer. The average age of motor vehicles in the United States has reached a record high of over 11 years old, creating a possible future need for car replacement. Thus, the auto industry's health in the United States continues to improve, as Americans are expected to purchase 16.4 million vehicles in 2014, which is a 6% increase from 2013, and it is the highest number since the pre-recession economy of 2006. Other potential opportunities for the automotive industry include the current decrease in gas prices, increased credit availability, and the continued economic recovery. General Motors, which is headquartered in Detroit, Michigan, is part of the big 3 American automakers, along with Fiat Chrysler and Ford. General Motors currently holds an 18% market share in the United States, which is a leading position for the auto industry, and it has been a popular brand in the United States for well over 100 years. General Motors, however, was heavily impacted by the economic recession, and the company declared bankruptcy and received federal bailout funds. After restructuring, in 2010, GM completed one of the largest public stock offerings after the company bounced back from their bailout, and this past spring, the company announced the appointment of its first female chief executive officer, Ms. Mary Barra. GM currently operates over 400 facilities in 120 countries worldwide, with a workforce totaling over 210,000 employees. General Motors looks to continue the tradition of the American-made automobile for decades to come.
Ford is an automotive company that produces and distributes vehicles across 6 continents. The company was founded in 1903 and is led by its CEO Mark Fields and Chairman of the Board William Ford Jr. It is one of the big 3 American automakers and holds the 2nd largest share of the U.S. market at 16%. The automaker is commonly known for creating the first assembly line, which allowed for the mass production of vehicles and made cars affordable for the average consumer. Ford generates its revenues through the automotive and financial sectors, and Ford's strategy going forward includes leveraging global assets and expanding internationally, accelerating the development of new products and technologies, aggressive restructuring efforts to improve profits in certain markets, especially in Europe, and also improving the balance sheet. One of the threats to Ford in the future is pending lawsuits. Many of these are related to alleged defects in the products, but other potential legal actions involve issues related to product warranties, taxes, environmental regulation, and other government regulations. Another threat is the recent increase in the number of issued recalls. In 2013, Ford recalled the 5th highest number of vehicles in the industry, and over 1 million vehicles were recalled for safety reasons, such as airbag and seatbelt defects and poor electronic power steering systems. Overall, Ford has a positive outlook in the future. The company is dedicated to maintain its status as a technological and safety leader in the industry. Aggressive efforts to expand and grow its market share overseas should be a key factor for the company in the future. In recent years, significant investments were made in emerging markets, especially in China, which should benefit the company in the future.
Toyota Motor Corporation is headquartered in Tokyo, Japan. It holds the largest market share in the world in 11.3% and the 3rd largest share in the US market at 14.5%. Mr. Akio Toyoda is the company's CEO. The last year, Toyota produced more vehicles than any company in the world.
BMW, known for its BMWs, Minis, and Rolls-Royce brand cars, It is the world's premier luxury brand automaker. The company also develops and manufactures engines for commercial vehicles and manufactures motorcycles. Norbert Reithofer is the CEO of the BMW Group. Joachim Milberg serves as the chairman of the supervisory board, with its headquarters located in Munich, Germany. The company serves 140 countries with plants in 28 cities throughout 13 of those countries. Because markets are saturated, the company competes more so on price versus differentiation. The USA and China are BMW's biggest markets. Japan and the UK saw growth in 2013, but emerging markets in India, Brazil, Russia, and most of Europe told a different story as their economies slowed last year. However, the economic climate continues to be optimistic in the wake of the 2008 world financial crisis. Overall sales of BMW brand worldwide created a new benchmark at 1,963,798 sold. The market for passenger cars and commercial vehicles rose by 5.1% last year. Total sales in China grew 19.2% and in the USA by 7.6%. BMW Group's workforce grew 4.2% to 110,351 employees, reflecting an increase in investment, particularly in fuel-efficient technology, and the company is very excited for cars like the highly touted all-electric i3 model.
We are going to analyze the financial ratios of the four companies. The current ratio graph shows the liquidity of the companies, which means the company's ability to pay the short-term obligations on time. Ford's current ratio is better than the other three companies mentioned here, which does not necessarily mean that their ability to pay short-term obligations. It can also mean that they are not using their money properly for investment. From the quick ratio graph, the short-term liquidity of the Ford is also better. We can see that the short-term liquidity of the Ford is also better than the other three companies, which supports that fact that the Ford is actually liquid. Moving over to operating ratio, we know that the smaller the ratio, the greater the organization's ability to generate profit. We can see from the graph that the operating efficiency of GM is better than any other company compared here. But Toyota is also up there from 2009 to 2013, which means that the Toyota and GM are aware that it doesn't take debt repayment or expansion into account.
The inventory turnover ratio demonstrates how quickly a firm is able to sell its inventory. As you can see from the chart, all four companies report similar turnover ratios and show relative consistent measures within the last 5 years. Net profit margin is a ratio used to measure profitability and is calculated by dividing net income by revenues. It measures the extent that a company's sales result in a profit. As you can see, for the most part, the companies have similar margin levels except for a few points that stand out. Toyota's net profit margin has been relatively stable, but has been slightly decreasing over the last 5 years. GM shows stable measures except between the years 2009 and 2010, where you can see a steep decline. Ford's profit margins were consistent except in 2011 it had an unusually high profit margin. And BMW shows somewhat low but stable margins. The return on investment ratio describes the rate of return management was able to earn on the assets that it had available for the year. Over the last 5 years, Toyota has reported stable growth. GM stands out the most because of its sharp increase in ROI between the years 2009 and 2010. This demonstrates management's ability to make a strong recovery from a bad position. Both Ford and BMW have had pretty stable ROI ratios in recent years, with BMW showing the most consistency. The return on equity ratio expresses a firm's ability to generate income from its stockholders' equity. As shown on the chart, Toyota's ROE has shown stable growth over the last 5 years. GM's ROE measures have not been consistent, especially between the years 2009 and 2010, where you can see a sharp decline. Ford's ROE has also been unstable, as shown with the direction shifts on the chart. BMW's ratios show the most consistency over the last 5 years.
P/E is calculated as market value per share divided by earnings per share. Investors look for a high P/E. It indicates how much they are willing to pay for the company's stock. In 2009, when the auto industry was going through a tough time with the recession, all four companies saw unique numbers, but the ratios evened out by 2013. One thing that we do see with this graph is that Toyota does appear to have the most stable P&E. This is something we expect, seeing that Toyota does sell the most cars worldwide. With that said, we move on to our conclusion on which car company we believe is the best investment. When analyzing which of the four automobile companies are the best, we took into consideration the indicators showing which ones show the best value. We decided that Toyota's financial statements demonstrate the most consistent measures among the four companies. Its liquidity ratios indicate the company maximizes its cash flow. Toyota's operating efficiency is also consistent with the industry. Furthermore, Toyota has maintained stable growth in the last 5 years for its measures on net profit margin, ROI, and ROE. Toyota's price-to-earnings ratios over the last 5 years were higher than the others, reflecting optimistic outlook on the company's ability to grow. We recommend its stock as a value stock, and we believe that it will continue to be a great long-term investment.
All right, well, that sums it up for us, and we hope that you enjoyed our video, and we wish you a happy holidays. Now go out and buy yourselves a new Beamer.
Well, what about Ford?
Hey, what about Toyota?
I wouldn't buy a GM, it's a piece of crap.
I wouldn't buy none of those cars. You want a luxury car.
How about a Porsche?